This is your technical update from the LMAX Exchange Research and Analytics Desk for Monday, December 29th, 2014. Euro dollar. So the market remains locked within an intense downtrend with a focus now on a test of the 2012 base at 120.40. Ultimately, only back above the 50-day moving average at 123.95 would compromise the current bearish outlook. Sterling dollar. Cable also remains locked within a well-defined downtrend, with the market most recently setting a fresh 2014 low at 154.85. Look for a break below 154.85 to open the door for a measured move downside extension towards the 152.50 area, while ultimately only back above 158.25 would compromise the bearish outlook. Dollar yen. Dollar yen has recently regained momentum, with the market putting in a potential higher low at 115.55 ahead of the next upside extension beyond the recent 7-year high at 121.85 from the 7th of December. A break above 121.85 would confirm the 115.55 higher low and open the door for the next major upside extension towards the 125 area further up. Only back below 115.55 would compromise the bullish outlook. Euro Swiss. Euro Swiss is in the process of attempting to carve a major base, but the market will need to establish back above previous support at 20.45 to confirm the basing prospect. Inability to close above 120.45 on a daily basis will keep the pressure on the downside and the focus on a potential retest of the barrier below at 120. Aussie dollar. Aussie dollar has been locked within an intense downtrend, with the market now focused on a potential retest of the next major barrier to the downside at 80. However, with daily studies oversold, on a short-term basis there is risk for a bit of a bounce, but look for the 20-day moving average to cap any rallies. The 20-day moving average currently comes in at around 81.90. Dollar CAD. Dollar CAD is consolidating just off recent 5-year highs and is focused on a test of the next measured move objective in the 117.50 area. Ultimately, any setback should be very well supported by previous resistance at 14.65, while only below 113 would compromise the bullish outlook. Kiwi dollar. Kiwi dollar has been locked in a bearish consolidation over the past several weeks, with the market eventually focused on a retest of the recent 76.10 2014 low. A break below 76.10 would open a measured move downside extension into the 7200 area. Ultimately, only back above the consolidation highs at 80.35 would compromise the bearish outlook. S&P 500. The SPX 500 has rallied to another record high into early Monday trade, with the market trading all the way up to 2095 ahead of the latest minor pullback. Clearly, the focus now is on the next major barrier at 2100, but with monthly steady stretch, there is risk for a reversal over the medium and longer term. A break below 2064, the low that we saw on the 19th of December, would be required at a minimum to take the immediate pressure off the top side. Gold. Gold is currently locked between 12.56 above and 11.31 below. 11.31 represents the recent four-year low that was set on the 7th of November. A break below 11.31 would open the door for bearish continuation down towards 1,000, while back above 12.56 would suggest that the market is trying to put in a base and end a sequence of consecutive medium-term lower tops and force a shift in the structure. Anything in between is considered consolidative, and we'll have to wait for either a break back above 12.56 or 11.31 for a clearer insight into the next move for the gold market. That's all for today.